I remember back in the day, for example, if I flew on my honeymoon in 2006 and there was a credit card sign up, they would hand out like paper pamphlets like, yo, put, do you want to sign up? And I'm guessing that went to some processor in the back end, little paper trail kind of business. This is a highly regulated industry. I've been told that, like, for example, some of the API connections maybe that you currently depend on probably took a little bit of nudging or a lot of nudging to get put in place. Give us an idea of what has allowed, like, how has the technology transformed over the last, let's say, 4 or 5 years, maybe 10 years, that's now made this available? Because it really wasn't that long ago where companies couldn't issue cards like this. Like, you had to fill out paper forms and so on.
Yeah, I mean, the whole sort of space of modernizing the consumer experience, it hasn't been long at all. And, I flew back into the country a few months back, and it was awesome to see how different, thinking about paper forms on a plane, we used to have lots of paper customs forms you get on planes, paper credit card applications, technology and really the mobile access to the internet has changed a ton of this. And in my view, it's changed it for the better in that you have a much more dynamic, much more sort of responsive system. You need to get some help doing it. It's a lot easier than asking a piece of paper what you're doing. I think it's interesting in the case of Marqeta to think about our journey getting here. So the company's about 12 years old, and actually, interestingly enough, started in a B2C space. So we're very much in the B2B model that I just described. But the company started, kind of the origin story, was our founder, Jason Gardner, thinking about how to put Groupon coupons, which actually back at that point were pieces of paper at all as well. You printed them out, you had this piece of paper with this code on it. He said, I want to figure out how to take this pile of Groupon coupons and put it on a credit card, a consumer credit card that then you could go and use to kind of redeem your purchases. So that kind of started the technical exploration. And it meant figuring out how you interact with the network, how you interact with a Visa or a MasterCard or a Discover or someone, and the ISO messages that get sent back and forth, and the kind of nitty-gritty technical file format, if you will, or messaging format that makes payments work, across the network, across the card rails, as they're called. About 6 years ago, then the company kind of took that technology that he had built and the founding team had built and adapted it to this more B2B scenario and kind of went API first and was opening it up for others to innovate and differentiate. But that early kind of genesis, all that work of figuring out, what was the nitty gritty of the card network, of the messages that go back and forth, how do authorizations work, kind of really the data flow that's behind what feels like a really normal everyday process. And frankly, when credit cards were first launched, I should know this off of my head, but I think it was in the early 50s, those processes, the settlement process, the authorization process, a lot of that was paper forms as well. So when we really think about how this industry has changed, dramatic modernization and dramatic kind of change with the advent of technology.
So yeah, for anyone out here listening that was born after, year 2000, which we have plenty of audience members after year 2000, it used to be back in the day in the 80s, they had these credit card swipe machines. These swipe machines literally were physical machines that would press the card into carbon paper. And then, so like this validation, like I know you currently validate like instantaneously, sub nanosecond, whatever, it occurred in the back office. Like you had to, I don't know how they did it, but like they got all their carbon receipts and they go figure out like, oh, who's valid, who's invalid. It was much harder to get a card back then. When you think about what it takes today, to give us our audience an idea of what it takes today to integrate with all these payment gateways, systems like credit, whatever you're integrating with, because you're playing in a space where you're issuing a microloan. I mean, it's kind of a microloan, right? Like you're basically giving me access to credit or cash that I have to prove that I have. Of course, if you make any mistakes, your merchants are going to be, you just can't make a mistake, because if you load my card with $1,000 and it turns out that I can buy $1,000 of merchandise and I don't have to pay that back, it's a serious problem. Give us an idea of what it takes to, what you're integrating with, like how many API calls are you making now when someone says, I want to sign up? Like how many calls are you making? What's being validated? I'm recognizing that payments is a huge ecosystem, but I think most customers have no idea because they just, like you said, swipe a card and they get paid and they're out of there.
Yeah, we just use it. It's It's a fascinating space, and it's been a lot of fun to learn because it's also a space where there are remnants of those carbon copy machines. And frankly, I should get one, have it here on my desk so I can show it to folks in the future. But there's sort of almost remnants of that. Not that we use carbon copies or pieces of paper anymore, but when you think about kind of the whole flow, there's a real-time flow, the authorization when you swipe a card or you make an online purchase to kind of do that validation that you were just highlighting, Albert, to make sure that there are funds available, that it fits within the credit limit, whatever other constraints that payment card may have. All the way through then settlement, which is kind of an out-of-band process that validates all those amounts. It's kind of the checks and balances to make sure that everything was done right. And that's the process where money moves from the cardholder's bank into the merchant's bank as well. And so, the whole architecture of this actually is sort of a modern technology-first version of what was first run with people and paper and some really rather impressive physical processes, if you will. Nowadays, the integrations are all software, but they're still relatively simple. The integration for authorization is, as I said, kind of working on this payment rails. You send a standard ISO message or you receive a standard message from the network. What's curious about this, and actually part of why modern card issuing is so helpful and so powerful in bringing a product to market more quickly, allowing a company to innovate in what they're interested in their focus of disruption, instead of just figuring out how to play in the space. In a lot of cases, this is not just like hitting a URL on the web or something. These are sort of more dedicated networks. They're more secure, they're more reliable, and they're very tightly connected and managed by those rails, by those card companies. So the Visa, the MasterCard, Pulse, et cetera, these underlying card networks or payment networks, they have pretty specialized gear, and the kind of trust and needs to connect to those and therefore participate in those message flows is pretty complex and quite a bit of work. So it's not, thousands of different touch points, but they're very complex. These are message types that have evolved way back effectively from that carbon copy, and now they support cross-border transactions, multiple currencies, all kinds of different things that were never envisioned when the systems first were put in place. So the message formats are kind of archaic and complex. Then you think about settlement. Well, that's a whole nother file. It's what we call a bank file that we get from the bank, and kind of matching all that up and making sure that the right real-time transactions happened and then the right money movement happens after the fact. So it's interesting. It's not a huge wide surface area, although we have a wide surface area of APIs and interactions that our customers use to customize how they want to use payments and how they want things to work quite a bit. We really connect to our bank partners, we connect to the networks, and that's kind of, the majority of what we need. But the depth of those interactions and the complexity to make those work 24/7, to make sure that you and I can buy coffee, can buy gas, can get on that plane if we need to, that's really where the hard part lies.
Yeah, when you just said that, I just started thinking about like, okay, so because I just went and traveled internationally. So two things I know, right? Number one, I know that not every major bank's in the cloud. That's a fact. Like not every major. So like cloud has not solved everything. So you're going to have to connect to data center processes. You're probably going to be limited by whatever speed, of course, that their data can retrieve and make settlements or validations, whatever that API call is. Then, like you said, transactions are global. So I just went to Pavones, Costa Rica, which is in the most remote part of Costa Rica, down near the Panama border. I'm swiping on a terminal that I'm not familiar with. Like it's probably South American, Central American terminal. Couldn't name it if I wanted to. So I'm swiping on that terminal. So it's got a ring back cross border to a different currency because I'm buying in Costa Rican colones. It's got to ring back to my bank in America. I don't know what infrastructure they use. It's got to then validate I have the money. Then it's got to agree and set a contract with the processor and the bank on their side that says you will get paid. And this has to happen in a fraction
within
of a second.
7 seconds. So
7 seconds. Actually, that's the requirement.
As a tech guy, it feels like an eternity, right? You're like 7 seconds. I can do anything in 7 seconds. But the reality is, it's pretty hard, and it's for the reasons you just highlighted. There are so many players in that cycle. So let's break that transaction down even more. Right? You swiped your card on some point of sale device. That device is from a particular company that's in the business we call merchant acquiring. Those are the companies who kind of provide the credit card machinery or debit card machinery, card payment machinery to accept payments on behalf of the merchant via a card network.
And for our audience, every country has their own like companies. Like this was not a Square terminal. This was not a Micros or whatever. Like it's not something I've never seen. I don't know what it was. It was in Spanish.
And it's probably been there a while. And to your point, it probably had a dial-up connection. It probably had a phone call that it made with a modem back to that merchant processor, or that merchant acquirer, excuse me. That company then in turn needs to pass that message. So you swipe your card, it collects some data from your card, collects some data from the person, the salesperson running the transaction, the amount, the company, et cetera, that you're buying this from, you're making this transaction with. The merchant acquirer then sends all that to the card network on your behalf. Maybe you're using a Visa card. So that's going to get sent over to Visa. Visa then kind of does some of the processing of their own to validate things. Then it looks at the card number, it looks at all the information that was put on the wire, put on that rail by the merchant acquirer, and figures out that, oh, that's a Marqeta processor card. That card is powered by the processing task is Marqeta. So that means Visa is going to route that transaction to us, and then we have to do all the work behind the scenes, maybe with your bank, maybe with the company that kind of sponsored your card, if you work with a neobank or something, in order to decide if we're going to authorize that transaction on your behalf or not. And that's both cardholder fraud, that's merchant fraud, that's understanding balances, and everything else that might happen, the cross-border currency work, everything you just highlighted and outlined. The determination to authorize or decline that transaction gets passed back to Visa, passed back to the card rails, traverses the card rails, goes back to the merchant acquirer, goes back down that dial-up line, and eventually shows up on that terminal saying that the charge was approved and it went through, or, oh, there's some problem, you need to try it again. So 7 seconds is a long time, but there's a lot that has to happen virtually anywhere in the world within that 7-second window.
IT Visionaries is powered by Salesforce Platform and Dreamforce. Did you know the very best Dreamforce sessions are available free on salesforce.com/plus? We recommend watching the Platform and MuleSoft keynote to get the download on doing more with less and increasing efficiency with automation.